Tesla led the market today, with the Dow gaining 146 points and the S&P advancing 0.32%. Meanwhile, Tesla stock surged 15%, leaving investors stunned. What caused this incredible spike? It's a textbook example of a CEO redefining leadership. Elon Musk continues to do what no other American CEO can, and while this isn't some magical formula guaranteeing Tesla's long-term dominance, it's a testament to his influence over the company and the market. That said, competition remains fierce. Full self-driving technology is still in development, and Tesla isn't immune to challenges, but no other company has managed to pull off what Musk just did. And that's exactly why investors keep pushing Tesla's stock higher, making last week's pessimistic analysts look foolish. It's almost as if Musk holds leverage over the broader market. Perhaps he does. Will Tesla's latest surge hold? Plenty of traders have bet against the stock, hoping to finally bring it down. But so far, those efforts have failed. With short sellers crushed, Tesla's stock has the potential to keep climbing. Tesla's rise has been nothing short of extraordinary. Veteran market analyst Jim Cramer recently broke down why Tesla isn't just another car company. It's an industry-defining force. Adding a staggering $314 billion in market value almost overnight, Tesla has left traditional automakers like Ford, Lucid, and even Ferrari scrambling to keep up. Tesla's stock has continued its meteoric ascent in 2024, soaring nearly 75% in the past quarter and an astonishing 180% over the past year. On CNBC's Squawk on the Street Cramer admitted he'd never seen a stock rise so consistently without an obvious catalyst. Even before the opening bell, Tesla was already gaining traction in pre-market trading. By midday, it shattered records again, climbing past $1,450 per share and pushing Tesla's market valuation beyond $1.3 trillion. Much of this momentum can be traced back to late 2023, when Tesla reported record-breaking earnings and expanding global sales. Investors also responded enthusiastically to Tesla's latest high-profile deal, which increased an existing fleet order from 100,000 to an even larger commitment. That announcement alone sent Tesla's stock soaring 15% in a single day. Wall Street remains deeply divided over Tesla. Bulls argue that the company is only beginning to unlock its full potential, not just in EVs, but in artificial intelligence, energy, and autonomous technology. Bears, on the other hand, insist that Tesla is riding an unsustainable wave fueled by speculation and overinflated valuations. Jim Cramer, a vocal Tesla supporter for years, hasn't wavered in his stance, calling Tesla's rise revolutionary. Many are stunned that Tesla's valuation is now approaching the combined worth of General Motors and Ford. Tesla's market cap has soared past $845 billion, while GM sits at $50 billion and Ford at $37 billion. Every time Tesla surpasses a new valuation milestone, skeptics raise concerns. They did when Tesla became more valuable than Ford and GM, and now that it's nearly the size of both combined. The reality is, Tesla's explosive growth is exactly what Wall Street craves. Investors will always pay a premium for a company that dominates its industry, while slow-moving competitors struggle to attract the same excitement. So, is Tesla's stock rise sustainable, or is it a bubble waiting to burst? The answer isn't simple. Tesla's dominance is driven by a combination of innovation, strong brand loyalty, and speculative enthusiasm. But does this momentum have staying power, or are we on the verge of a major correction? A few key factors are driving Tesla's incredible growth. First and foremost, Tesla has revolutionized the auto industry with cutting-edge technology. Battery advancements, self-driving software, and energy solutions have made Tesla far more than just a car company. But beyond innovation, Elon Musk's ability to command attention and shape investor sentiment plays a significant role. His bold promises, whether realistic or not, keep Tesla in the headlines and fuel excitement around the stock. However, critics argue that Musk's influence is a double-edged sword. While his vision has propelled Tesla forward, some see him as more of a showman than a traditional CEO. The question remains, can Tesla continue to thrive purely on investor enthusiasm, or does it need to deliver tangible results beyond hype? There's also the question of market manipulation. Some insiders speculate that Tesla's stock price is being propped up by institutional investors who don't want to see it fall, at least not yet. With Tesla representing a major piece of many tech-heavy portfolios, large investors may be strategically supporting its valuation. The real concern is, how long can this artificial price support last before the market corrects itself? Beyond that, there's the undeniable influence of retail investors. Tesla has become the ultimate FOMO stock, with millions of traders convinced that holding shares is their ticket to financial freedom. This speculative frenzy has driven Tesla's price-to-earnings ratio far beyond traditional automakers, raising concerns that the stock is operating in its own bubble. So far, traditional automakers have struggled to compete with Tesla's dominance. Ford, GM, and others have attempted to enter the EV space, but they're burdened by decades-old business models that don't adapt well to rapid change. However, they're learning quickly. The F-150 Lightning and Chevy Bolt have made headlines, and Ford recently reinstated its dividend, an appealing move for long-term investors. Still, Tesla's biggest advantage may be its ability to scale. Its rapid expansion in China highlights just how far ahead it is. While Ford and GM face major struggles in the Chinese market, Tesla has built a massive production facility in record time. Musk has even suggested that this new factory could reach 250,000 units annually in just a few years. That said, Tesla's global expansion comes with risks. The Chinese government has been known to favor domestic companies, and rising geopolitical tensions between the US and China could create challenges. If China ever decides to limit Tesla's operations, it could significantly impact Tesla's long-term growth. Despite these potential risks, Tesla has maintained its reputation as a transformative company, but its future depends on more than just Musk's next big idea or another surge in share price. Tesla is currently riding a wave of near-religious investor belief, driven by hype, speculation, and a market willing to overlook traditional valuation metrics. The big question is, how long can Tesla maintain this lead? Ford and Lucid are working hard to close the gap, but for now, Tesla remains in a league of its own. Its combination of brand loyalty, superior technology, and a fully integrated charging network gives it an edge that competitors can't easily replicate. Ford's challenge is balancing its legacy gas-powered vehicles with its new EV initiatives, which splits its focus. Lucid, on the other hand, is targeting the high-end luxury market, but its limited production capacity makes it a niche player rather than a serious threat to Tesla's mass-market dominance. Tesla's advantage isn't just in its cars, it's in its entire ecosystem. Supercharger network, over-the-air software updates, and energy products create an interconnected experience that no other automaker has matched. This seamless integration gives Tesla a major edge, making it difficult for competitors to replicate its success. So, is Tesla truly untouchable? For now, it seems so. Traditional automakers are struggling to pivot fast enough, and while competitors may gain ground, Tesla's lead remains significant. The company isn't just ahead in technology, it's setting the standard for the entire EV industry. Tesla's rise has been nothing short of historic, and whether you believe it's a revolutionary force or an overhyped bubble, one thing is certain: the stakes are incredibly high. As investors continue to debate Tesla's future, the outcome will have massive implications for the entire auto industry.